The Philippine stock market has seen better days. But before we dive deep into the numbers, let's start with a bit of optimism. Yes, there is hope. The Philippine economy still has a young population, a growing labor force, and a consumer base that's becoming more financially literate. The long-term demographic story is still intact. Filipinos are entrepreneurial, resourceful, and adaptive. And historically, every time our market fell, it eventually recovered, sometimes slowly, but it did. That's the hopeful story. But after more than a decade of waiting, it's time to ask a difficult question. What if this time it doesn't? Because when you look beyond the slogans, the optimism, and the headlines, the truth is painful. Let's start with the numbers. Because in the world of investing, narratives can be misleading, but the numbers don't lie. In the last 10 years, the Philippine Stock Exchange Index has barely moved. If you invested in 2013, you'd be sitting on roughly the same value today, or even less, after accounting for inflation. This sideways movement isn't stability. It's a slow, corrosive loss of opportunity. Meanwhile, investors who put their money in a simple S&P 500 index fund more than doubled their wealth. This isn't just bad performance, it's a decade of stagnation. A lost decade for local investors. The PSEi is stuck in a cycle of short-term rallies followed by deeper sell-offs. It's like watching a patient on life support. A few blips here and there, but no real signs of a sustained recovery. Why? Because our market reflects the structure of our economy, and our economy, for all the growth headlines, remains fundamentally fragile and narrowly focused. Corporate earnings are growing slower than regional peers. We're experiencing an IPO drought with fewer new companies listing compared to our neighbors. And the backbone of our economic story, remittances, is starting to plateau as global competition for labor intensifies. Meanwhile, persistent inflation eats into purchasing power. Every peso buys less every month, and yet our interest rates remain high, making borrowing expensive and business expansion harder. For those invested, the weakening peso compounds the losses, eroding wealth even further when measured in global terms. Foreign investors see all of this, the weak earnings, the policy gaps, the currency risk, and they're not impressed. They've been pulling their money out, with foreign ownership hitting multi-decade lows. This isn't a temporary dip, it's a long-term verdict on our market's lack of appeal. Foreign ownership in Philippine equities has fallen to multi-decade lows. This isn't just a statistic, it's a clear signal of waning international confidence. We used to be one of the darlings of Southeast Asia, attracting significant capital. Today, we're often ignored on the global stage. Even when the government announces reforms or infrastructure spending, the global market shrugs. Years of ambitious plans followed by weak execution means they've heard it all before. The painful reality, the Philippine market has lost its credibility, and that's not something you can fix overnight with a simple press release. Now, let's talk about opportunities, or rather, the structural lack of them. The PSE is dominated by a few large conglomerates. The same names we've seen for decades: Ayala, SM, JG Summit, Aboitiz, Metrobank. Great companies. Yes, but they represent the old economy, offering stability but limited dynamic growth in a fast-changing world. We don't have a strong tech sector. We don't have fast-growing startups going public. A stark contrast to our neighbors who are innovating rapidly. This creates a market that is concentrated, slow, and in many ways, outdated. For most investors, it means the index is held up by a handful of winners, while the majority of stocks lag behind, offering poor risk-adjusted returns. Compare that to other markets, the US has the Magnificent Seven. India has a booming tech and renewable sector. Even Indonesia and Vietnam are attracting more IPOs and innovation-driven companies. Meanwhile, our stock market struggles just to attract listings. Liquidity is thin, retail participation remains low, and institutional investors are reallocating capital elsewhere. Even the dividend yields, once the saving grace of PSE investing, have been outperformed by safer global bonds and REITs abroad. So yes, there's still hope, but hope doesn't pay returns. And it certainly can't outrun hard data. When adjusted for inflation, sideways isn't stability, it's a slow, grinding loss. To understand why, we must look at the broader context. The Philippine economy itself and the structural headwinds it faces. We're facing a unique storm, persistent inflation, a weak peso, sluggish manufacturing, and declining confidence from both domestic and foreign investors who are now voting with their feet, pulling capital out. The cost of living is rising faster than wages, squeezing the middle class until there's nothing left. The average Filipino is forced to save less and borrow more. When consumers can't spend, corporate earnings suffer, creating a vicious cycle with no clear end. And yet, the peso continues to lose ground against major currencies. When you convert your money to dollars or euros, you immediately feel the difference. This depreciation isn't a theoretical risk on a chart. It's real, tangible wealth erosion happening in your bank account every single day. So if you're holding assets purely in pesos, your savings, your portfolio, your property, you're losing purchasing power, not because of a sudden market crash, but because the very currency your wealth is denominated in is systematically bleeding value, day after day, silently eating away at your future. Now, let's be brutally honest. The rest of the world is not waiting for us. While the PSE drags sideways, global investors are making money in US, tech, AI, commodities, and digital assets. Even Bitcoin, for all its volatility, has massively outperformed the PSEi over the last decade. Gold has surged as currencies weaken. Global ETFs offer diversification that the local market simply can't match. And property abroad in places like Thailand, Malaysia, or Dubai often offers better rental yields and capital appreciation than Manila condos. The question isn't whether the PSE has hope. The question is it still worth waiting for? Because every year you hold your capital in an underperforming market, you're losing opportunity elsewhere. It's not about giving up on the Philippines. It's about being realistic. You can still love your country while acknowledging that your money deserves better treatment. The global markets are open. You can own Apple, Google, or Tesla shares. You can buy gold. You can diversify in dollars, euros, or even crypto. You can invest in countries that are growing faster, managing inflation better, and treating investors with more respect. And that's what smart money is already doing. The silent outflow of capital isn't made up of complainers, it's made up of realists. People who saw that the Philippine market is no longer giving fair risk-adjusted returns, and they acted accordingly. Hope is a beautiful thing, but in investing, hope without a plan is a liability. So if you ask me, does the Philippine Stock Exchange still have hope? Yes, it does. But hope alone won't make you wealthier. The numbers don't lie. The world has changed, and it might be time your portfolio does too.